Today, we're going to be focusing on the Canadian energy companies again. This is the third video in the series. I broke this series up into 3 videos as I separated each energy company into different categories. Oil and gas companies split their operation into 3 categories: upstream, midstream, and downstream. In the first video, I took a look at the companies that focus mainly on the midstream aspect, which transports and stores oil and gas. In the second video, I took a look at the integrated oil and gas companies, which deal with both the upstream and the downstream. Upstream focuses mainly on the oil and gas exploration and production, where downstream deals with the refining and distribution. I will link those 2 videos in the description box below if you want to take a look. But today, I'll be focusing on companies that deal with just the upstream aspect. There are so many oil and gas companies out there that are involved with just the exploration and production of oil and gas, but the majority of them are very small companies, under a few $1 billion. And after seeing just how volatile oil can be, as we have seen it drop from over $100 a barrel to around $30 a barrel in just like 5 years ago. And more recently, just last year, we saw oil drop from $75 a barrel to around $43 a barrel. I'm worried that if the company doesn't have strong financials, there could be a chance that they may go bankrupt. So I took the liberty of eliminating the smaller players and will be just looking at the bigger players in the space. So I selected the 5 larger oil and gas companies today, and by far, Canadian Natural Resources is the largest. One thing I want to note is that these numbers fluctuate so much, so when you're looking at these PE ratios, their earnings per share, and even their dividend and their payout ratio, it changes so much from year to year, and you'll be able to see this when we go over it later in the video. So moving on with the stock performance comparison, we can see that over the years, it has not performed well, and with the world ever so slowly changing over to renewable energy, I really don't know what the long-term performance will be, as it is tied directly to the price of oil. Again, when we take a look at the annualized return, we see a sea of red, and that does not look good for investors. And just by looking at these numbers, you might assume that it was caused by the crash in oil, like 5 years ago. But when you look at the chart, you can see that the stock performance has been declining long before that. We can see a gradual decline in stock performance almost 2 decades ago. The only one that's held up was Canadian Natural Resources. Let's take a look at their yearly revenue. The first 2 things you'll notice is a drop in revenue in 2009 and in 2015, which is expected as it corresponds to the crash in oil. You may also notice that in Canada has been continuing to decline in revenue since 2009, but in 2009 it spun off its oil business and formed Vermilion Energy. When we're looking at their yearly profits, you can see a lot of spikes up and down, which is very unpredictable and not something I like to see as an investor. And on top of that, it hasn't been growing, it's more of a decline than anything else. But just looking at their yearly profits, it doesn't tell us much, as they could have written down a lot due to depreciation, which would affect these numbers a lot. A better measure would be to look at the cash flow. Ever since the oil crash in 2008, in Canada and Vermilion Energy has been on a decline. Canadian Natural Resources I would consider flat to slightly up. It's kind of hard to tell with all these spikes up and down. But Tourmaline Oil and Vermilion Energy has been growing the cash flow, which is good. When it comes to dividend, there's only 2 companies that stand out to me, and that's Canadian Natural Resources and Vermilion Energy, as they both are the only ones to have continued paying their dividends and growing them at the same time. In Canada and Vermilion Energy both have cut their dividends in the past, which is expected with their declining cash flow, and Tourmaline Oil has just started paying dividend just a few years ago. And again, when we look at their dividend growth, I'm sure you're not surprised to only see Canadian Natural Resources and Vermilion Energy with the positive dividend growth. Vermilion Energy hasn't been really growing the dividend much over the years, but their dividend is really impressive with a yield around 9-ish%. But whether it's sustainable or not, I'm not sure. But they did increase their dividend last year, so I'm assuming they think they can continue to support it. If they can, that is an excellent rate of return. Canadian Natural Resources has been growing the dividends very consistently for almost 2 decades at around 20% a year, except for the small hiccup they had from the oil crash in 2014. The other players either have just started paying a dividend or has been cutting their dividend. So out of these companies, which one do I like the best? Personally myself, I'm not a big fan of this space because number 1, their stock performance is usually not the best. And number 2, it can fluctuate a lot based on the price of oil, which makes it hard to determine the future outlook of these companies. And even if the dividend is sustainable over a long term, because if I buy a stock for dividends, I plan to hold it for the long term, and I would prefer consistency. I don't like all these spikes up and down with the risk of a dividend cut. And number 3, I prefer to invest in renewable energy. If my investment can help the planet and make me returns, it's a win-win for everyone. I would say that Canadian Natural Resources is the better of the group, as they have been consistently growing and paying their dividends, and their stock performance hasn't been declining like most of the others. It has at least held its levels over the past decade. And if you have a very high risk appetite, then Vermilion Energy could be a decent investment as well. They may not have grown their dividends much over the past decade and a half, but at least they have not cut their dividend either, and they do have a very high yield already. Their stock performance is not as good as Canadian Natural Resources, but it's still better than a lot of the others. And as always, if you enjoyed the video, please like and share the video. I really appreciate it, because making these videos takes a lot of time to do the research on all these companies, and it really helps out the channel, and hopefully we can reach more people and help them make better financial investments. And if you haven't subscribed yet, please make sure to smash the subscribe button, and thank you for watching. I'll see you guys in the next video.